So, I mean, is it sufficient to wipe out the losses of growth, losses of income during the pandemic? It's clearly not. I mean, if there were no pandemic, the GDP levels would have been expanding in following this blue line that you see. Now, what the pandemic did was it brought the level of GDP down in FY21, 7.3% below what it was in 1920. And it will follow this path, the dashed line, which is in red color, which is equivalent to, which is similar to the path that that the pre-COVID trend line was. But I think the notable difference is that there's a gap between the two. So you will grow at the same in the same direction, maybe at the same rate, but will not be able to catch up with what the GDP would have been without the pandemic. This is referred to as the permanent loss, which we estimate at around 10% of GDP. The economic survey last year had also estimated it around 9 to 11%, I think, range. So this is fairly given. I think you can only erase it if you grow at around 12 to 13%. Now that was the medium run. Now there are many challenges that we face. The pandemic has given a boost to technology. It has given a boost to some of the segments, e-commerce, etc. And there is a dearth of people. I think there is a skill mismatch there. People are getting phenomenal salaries, particularly in technology segment, because the need for that has increased. But at the same time, there's a large army of unskilled people who I think are unemployable people, I think, who are on the other side. And I think the pandemic made this challenge even more binding. In the next 10 years, we will see about 100 million people come into the workforce, and they would seek employment. So I think from an employment perspective, the pandemic has provided a hit, and I think this has also opened up opportunities, but they are in the segments which are technology driven, etc., where I think employment opportunity is not that much. Businesses, I think, have to prepare for the pandemics in future, because it's predicted that the pandemics are not going to go away, and they will need to prepare with shorter time response to big business exigencies. And also, I think they'll have to focus more on sustainability, which is a term which I heard, I think, some time back on tax sustainability, but business sustainability, not merely on the profits. I mean, and finally, I think this pandemic has been a big wake-up call for revamping the healthcare segment, which was generally neglected. People were focused on getting more focused on the lifestyle diseases, and now I think we have another can of worms, which is the infectious diseases, where I think a lot of energy will have to be focused on. So I think I don't want to end on a pessimistic note. I think but the point is, these are some of the realities. The economy will do well, I think, and probably will remain one of the faster growing economies even with this scenario. There are some rays of hope coming from the PLI scheme, which I think government had launched. It can push manufacturing sector activity up, and there are already some positive signs of that. And finally, the infrastructure focus, where I think government plays a much bigger role than the private sector. I think the infrastructure focus of the government means that the ability of the economy to grow faster or sustain growth will improve. I mean, it does not only gives immediate push to the economy, but also raises the potential over the medium run. And I think these two monitorables need to be very closely watched. So with that, this is the end of my presentation, and I thank you all for listening very patiently.
Joshi, for your presentation and sharing your deep insights. And now I would like to request the chair for the session, Mr. A.N. Jha, to please share his special comments.
Good afternoon to all of you. I must thank Dr. Joshi for a very comprehensive presentation on the challenges that are there for the Indian economy, the prospects which lie ahead, and how he sees it will unfold. He has very succinctly brought out the issues, the challenges, and the interplay of the monetary and the fiscal policies, as we go forward, the growth challenges, where and how we got hit, and where we move ahead in terms of the next 4 or 5 years that are there in the medium term. Uh, Two important points which he has highlighted and flagged are the level of confidence, the level of consumer confidence that prevails, and how the pandemic has affected it. Because ultimately, it will be the consumer confidence which will drive a lot of engines of growth as we go forward, as well as the inflation uncertainty that lies ahead of us. We are already at the threshold of what the RBI holds as the upper limit of the inflation index of 4 to 6%, and how much that will move and where it will move is something which we will have to wait and watch very carefully. 2 points that I would like to highlight here is on the importance of fiscal policy, which Dr. Joshi very rightly pointed out. I think there is some inherent challenges which I perceive lie before the government. One, of course, is the very large fiscal deficit that already exists for the central government. It has been existing even before the pandemic, because we saw 2 years of, rather 3 years of decline in growth prospects of the economy from 2017 onwards, where the GDP has been on a declining slope. So the economy was struggling when the pandemic hit, and the impact of the pandemic, as he has very rightly pointed out, has been very, very severe on the growth prospects. So how much of fiscal interplay does the government have, the central government have, is extremely crucial, because last year we saw almost 10% of GDP being the fiscal deficit of the central government, plus another 4 to 5% of the state governments. Here, I just wanted to flag an important point, which is the role which the state governments play, because the state governments actually control almost 63% of the total public expenditure that takes place between the center and the states combined. So how much is the scope over there, and whether they are utilizing the full fiscal space that is available? And recent studies have indicated that the state budgets themselves are short of what would be an optimum level of fiscal space that they can utilize. And that's where I think the kick in needs to come in. The second issue which fiscal policy has to keep in mind perhaps is the inflation prospects, because with money supply, etc., being at its all-time high, plus the monetary policy having exhausted its limit, if the fisc also adds to that, whether it will give a further inflationary push to the economy will be something on which Dr. Joshi and experts like him would certainly be looking at. But I must compliment him again for a wonderful presentation. He has captured the essence of the challenges and the path which we all foresee for the future. And here again, it's very important. I just wanted to flag, in the context of today's prize distribution ceremony and the role which TIOL plays, is the importance of tax revenues. Because India's tax revenues, as all of you know, has been almost stagnant at tax GDP ratio has been almost stagnant over the last 20-30 years. It hovers around 10 to 11%, and the pandemic has further made a dent on it. And how we wish to raise that limit, whether it can be raised and to what extent we can go, will have a large role in the shape of the expenditure prospects and the fiscal policy prospects, which the country will have to look at in the medium term. And therefore, this type of initiative which TIOL has taken is extremely, extremely important. And I wish to compliment them and thank them for the opportunity they have given me. Thank you very much. And especially Dr. Joshi. Thank you.
Thank you so much, Mr. A.N. Shah, that was former Finance Secretary and member of the 15th Finance Commission, sharing his special observations on the first session of the TIOL Tax Congress. Thank you so much, Mr. Jha, for sparing time for the Congress and staying back. Thank you. Thank you so much. And now, ladies and gentlemen, we move towards the second session of the TIOL Congress. Our second session is on international taxation, global minimum tax and digital taxation. Before I introduce my speakers on this session, I would like to request Mr. G.C. Srivastava, practicing advocate and former Director General of International Taxation, CBDT, to please join the dais and chair the session. So would you like to sit here and watch? Sorry? Yes, they're here. G. To take this session forward, we have a video all the way from Netherlands from Professor Pasquale Pistone, who is the academic chairman of IBFT Netherlands. He holds a Jarmone ad personam chair in European tax law and policy at WU Vienna, Austria, and is habilitated as full professor of tax law in Italy. He is editor-in-chief of IBFT's World Tax Journal, International Tax Studies, doctoral series, and Global Tax Treaty commentaries. Professor Dr. Pistone is also co-director of IBFT's Observatory for the Protection of Taxpayers' Rights, co-chair of the Tax Committee of the International Law Association, secretary of the Executive Board of the European Association of Tax Law Professors, a member of the Permanent Scientific Committee of the International Fiscal Association. Let's take a look at this very special video all the way from Netherlands.
My name is Pasquale Pistone, and I'm the academic chairman of the IBFD, as well as a professor at the WU Vienna University of Economics and Business and at the University of Salerno. I'm extremely sorry for not being there with you due to travel restrictions, and at the same time, this is the time of my long summer holidays. But I really wanted to be at least with you by sending you this video recorded message. I would like to thank Mr. Shailendra Kumar for the invitation and for organizing this interesting event, and also my friend D.P. Sengupta to make all this possible. I present my regards to the chair of this session, Mr. Singh, and also to Mr. Akhilesh Ranjan, who will be speaking after me. The focus of my presentation is related to the topic of the session, which is on digital taxation and global minimum tax. I want to say that during my presentation, I will be referring to turnover taxes, but when I refer to turnover taxes, I will not be referring to GST or VAT, but I will look at turnover taxes as a proxy for value creation, being the other proxy income. And this is why I think it's important to clarify this, because when you hear me referring to turnover tax, I intend, in fact, to refer to taxes which are similar to digital services tax. So my presentation focuses on 4 points, and those 4 points, I want to mention them right now. And then I want to make a brief introduction, and then I will address them. The first point of my presentation is on the legitimacy of the international tax nexus on business. This is what has started creating the problem, because of the fact that business models have dramatically changed, and we haven't been able to change the international tax nexus accordingly. The second point focuses on GLOBE, and GLOBE is certainly particularly important within the framework of my presentation, because I would like to address the potential implications arising from the establishment of an international minimum standard of income taxation, both from the perspective of legitimacy. This is actually the second point of my presentation, and from the implications for tax competition. And then I will close my presentation with some remarks on inter-country equity and the potential developments that could take place in the future. Now, let me start by introducing my remarks. And I would like to say that I am a strong believer in international tax coordination. I think that global problems require global answers, and balanced solutions require a fair participation of the different countries around the world to establish a reform of international taxation at the time of global tax governance. Global tax governance doesn't mean that some countries rule the world by imposing their tax conditions, but global tax governance means that it is, there is a need for legitimacy. And this is important, in my view. Even informal fora, such as G20, are giving an opportunity to look at what is desirable for a number of countries and also, implementing this around the world. But still, 20 countries around the world do not rule the world. So we have to avoid that. Instead of having, a few countries, we have 20 countries ruling the world. G20 is just important to convey international tax coordination. Good reform of international taxation requires balanced and fair solutions, and these is what will make them last for years. We know that for about 100 years, we have been essentially having the same structure of international taxation, which has been relying on a tax nexus. The starting tax nexus is the objective nexus, which looks at where wealth is produced, and in this case, if we talk about income taxation, where income is produced, where income is sourced, that country has taxing rights. But in parallel with this, we have been seeing the development of the personal nexus, and the personal nexus can be questioned because of the fact that it, number one, creates double taxation, but at the same time, it also stretches the taxing jurisdiction of some countries beyond their boundaries. It has been justified from various perspectives, including the economic ones and including based on capital export neutrality for some countries or corresponding mechanisms of capital import neutrality. This is not the place where we should address those issues. I think that for the time being, we should be aware that the legitimacy of the current international tax nexus is faltering. So from this perspective, I suggest that we consider that the problems of international taxation are problems essentially related to nexus. In the framework of the International Law Association, just about to start a new research activity, which is trying to discover from the perspective of public international law how we can reform the current international tax nexus. And I think that we should be quite frank in saying that right now, the boundaries, the physical boundaries of the concept of permanent establishment are basically turning permanent establishment into a cage for the exercise of taxing rights by the so-called market state when there is potentially a significant economic presence on the territory of a country and there is no physical presence of business as such, or we have a very limited risk run in what we can call the market state, or the state where there will be no people. Now, this is what needs to be reformed. Do we want to reform it by looking at solutions within income taxation, or shall we abandon income taxation and go for other forms of taxation instead? What we have seen across the past couple of years has been a blossoming of turnover taxation. But this was the unavoidable consequence of the fact that in the so-called first phase of the BEPS project, there was no possibility to strike a fair balance on the allocation of taxing powers on action 1 of the so-called digital economy action of the BEPS project. And this is what has brought countries to say, well, if you don't want to allocate taxing rights to countries where there is a significant economic presence and there is no actual presence of business, or there is a limited risk from there, then you know what, we will anyway exercise our taxing powers by reference to alternative means, the most important of which is digital services taxation. Basically, instead of taxing value creation using the proxy income, we tax value creation using the proxy turnover. And we have seen that this is an important reality right now. So right now for business, this creates a sort of parallel world, because in the absence of a permanent establishment in the market state, they pay taxes on income in their country of residence, and in the market state, they pay taxes on their turnover. That's unacceptable. I mean, I say that if there is a tug of war between two blocks of countries, or maybe between the United States on the one side and all other countries on the other side, I think that it's unacceptable that business has to pay the price, and it's unacceptable that countries are de facto deprived of their rights to collect and levy and collect taxes on business exercised or exploiting their territory. So this is important. We need to reform, and as I said, we have two options. One is reforming the PE concept and reforming income taxation, and the other one is using other taxes instead. But whichever way we go, we need to achieve coordination. And I will get back to this on my fourth point, which is on inter-country equity. Now, let me focus on GLOBE, and I will address GLOBE from the perspective of its legitimacy and from the perspective of implications for tax competition. From the perspective of legitimacy, the first point is, do countries have the right to exercise their taxing powers on income that is not sufficiently taxed in another country? Well, the answer is yes. If there is a global agreement on the establishment of a minimum taxation on business profits, which basically sets out a goal to prevent the so-called race to the bottom, but preventing the race to the bottom is right now an important way to address a problem that hasn't been solved so far, because the fact that we have tax competition has in fact allowed some countries to push it to the limits and the boundaries of what can be acceptable, and therefore some companies have been finding a shelter under the taxing jurisdiction of some countries, and in fact this creates a systematic vulnerability of the whole global system. So if this is a globally desirable goal, then countries can actually enforce that based on an agreement that allows them to do so. We do not know yet what could be the rate of GLOBE. We do not know yet whether it will be just related to harmful tax competition regimes or will apply on an overall basis. I want to say that drawing a dividing line between what can be harmful competition and what is perhaps genuine practices make the system more complex to operate across the countries. And I feel that somehow there will be a sort of general scope for all business profits of GLOBE. So let's assume that this is the case, and let's assume that there will be a situation in which we have we can have a minimum income taxation, could be 15% or whatever. But what happens at this times, I think it's important that we don't forget that the desirability of removing all possible tax shelters for multinational enterprises not to pay taxes is not the only goal of global tax governance. Right now, we are still in times of global COVID crisis, the pandemics, and therefore we should not forget, we ought not to forget, that taxes can be used for regulatory purposes. Now, we can discuss as to whether tax incentives are efficient or not. The economic studies have been, looking at the impact on foreign direct investment in the past, but at the same time, we know that the data that have been used to reach conclusions were collected at the time in which there was no real tax transparency, and it could be easy to root out of a country some income. Therefore, I think that maybe further consideration is needed in this respect. But let's make one point. If countries do want to pursue regulatory purposes with taxation and granting tax incentives for genuine purposes, what happens? What happens, and here we go into the tax competition part, what happens is that some countries, because of GLOBE, will in fact be making a sacrifice, and the other country can levy its taxes on top of the ones that were levied by the country that is granted the tax incentive. Is this what we want? Maybe yes, but what happens if we don't, apply this GLOBE also domestically? It may create a bias in favor of investing domestically, because if a state grants tax incentive and lowers its taxes, for instance, on profits, then the investor domestically can get the tax advantages, but across the borders there will be no such situation, because the state of residence will systematically use GLOBE to compensate lower taxation in the country of source. So this is not acceptable, and I think that this is a situation that can also create some major repercussions between countries importing capital and countries exporting capital, having enough capital to be used domestically, and at the same time also I think that there will be a situation also among OECD countries between the big countries and the small countries, because the small countries normally import the capital. So I think that we should really seriously consider this. What's the best way out of this? Is it creating carve-outs for some fields. I'm not sure that carve-outs are a good idea, because carve-outs are often the outcome of lobbying done by some groups of pressure, and I think that perhaps we should consider that a proper balance of what is allocated to the market state by acting on the so-called first pillar is perhaps the right way out. But at the same time, I think that what is most important is to understand that the overall application of GLOBE should take place in a context which preserves inter-nation equity. And this is something which, in my view, is perhaps the top priority. No real reform can last for long if it's not fair. And fairness is this time among the countries, because some countries want to tax more and some countries want to tax less. I think that from the perspective of developing countries, the right to pursue economic development, and in this case of COVID crisis, to reactivate the economy, is priority number one. It's fair that those countries have the conditions to import the capital that is needed to that, for that goal, for pursuing that goal, and therefore GLOBE should not turn into an obstacle for doing that. But if we think about international agreements like TRIPS and transfer of technology with tax incentive to developing countries, that is something which creates international obligation. I could continue with the so-called tax sparing clauses. So there is no right of countries to compensate for lower taxation. So I think that when we talk about the potential implications of GLOBE, we should consider that the international instrument that will implement GLOBE should also take into account that if some countries levy taxes on turnover instead of income, we can't accept that GLOBE compensate lower income taxation, and then on top we have this turnover taxation. All this shows the importance of international tax coordination through agreements, which are absolutely indispensable to achieve a fair solution to the problems of global tax governance. And digital services taxation should therefore be not a battlefield, but rather a laboratory for finding the correct coordination across the world. Thanks very much for your attention.
Thank you so much, Professor Pasquale Pistone, for the detailed perspective on international taxation. Before I move on to our next speaker for the session, I would like to request all the guests who are standing at the back to please occupy the seats for the rest of the Congress. And also, if we have guests who can hear me right now who are outside the door, please, if you could join us back in the hall and attend the rest of the Congress with us. That'll be really nice. Thank you so much. Moving on with the second speaker of the session on international taxation, global minimum tax, and digital taxation, I would like now to request Mr. Akhilesh Ranjan to take the session forward. Mr. Ranjan is an IRS officer from Income Tax, retired as the member of the Central Board of Director Taxes in the Ministry of Finance, is widely acknowledged in India and abroad for his special knack and expertise in the domain of international taxation. Not just that, he also led the Indian team for several critical international treaties, negotiations, and OECD talks on behalf of Government of India during his tenure in the board. Thank you so much, Mr. Ranjan, for making time for joining us today. Over to you.
Thank you very much. Thank you very much for that very kind introduction. And a very good afternoon to all of you. It's a pleasure always to be with the Tax India Online. I have been associated with this journal for a very, very, very long time. I congratulate Mr. Shailendra Kumar and his team and the TOIL Foundation for this award ceremony and for this very great event. So the topic that I'm supposed to speak on is on global minimum tax and on digital tax. And I think this subject has been chosen because of a very recent international agreement announced by the OECD on the 1st of July on two aspects. One, on the levy of a global minimum tax, which means that all multinational enterprises have to pay a certain minimum tax on their profits, and on a means to meet the challenges of the digitalized economy. Now this agreement, which of course has been announced, there's a consensus between 130 countries odd. It has been presented as a package of minimum tax along with the digital tax, a package which is supposed to transform the world of tax and the world in general. It has been hailed as something which will bring about stability of the international tax system, fairness of the international tax system. It has been hailed as an answer to the problems of digitalization or the solutions for digital tax. In fact, the Chancellor of the Exchequer of the UK, Mr. Rishi Sunak, has gone on record by saying that we have now achieved a state of nirvana in international tax, and that now the right companies will pay the right amount of tax in the right place. And what I would like to speak about in the next 10 20 minutes is whether we have actually achieved that, whether the international community has really achieved stability, fairness, or is it an important step and directed towards larger goals in the future? Is it justified to say that we have achieved nirvana, or is it an admission that we have to conquer many difficulties still in the road to achieve a fair tax system? So, very briefly, what is this whole agreement about? It's centered on two streams of work, which are referred to commonly as the Pillar 1 and the Pillar 2 work. The Pillar 1 dealing with the challenges of the digitalized economy, and Pillar 2 dealing with the global minimum tax. These two streams actually are independent streams. There is a very tenuous connection between the two, although they have been presented as a major international package. Pillar 1 essentially talks about reallocating income or a certain portion of super profits earned by multinationals to market jurisdictions, even if there is no physical presence of the M&E in that market jurisdiction. It's important because the concept of physical presence has been whittled down. And then Pillar 1 also talks about a grant of a taxation right to these market economies, where they will be able to tax this reallocated profit of the multinationals. Pillar 2 then, of course, it talks about only a global minimum tax. It says that every multinational enterprise will pay a certain minimum amount of tax on the profits that it earns in each jurisdiction or each country that it operates in. So where is the connection? The connection could only be that, yes, because of the digitalized economy, companies were able to park profits in different locations in where the taxation levels were lower, or there was no taxation. And probably when you take both of these proposals in combined effect of them will be that it will achieve a more fair system of taxation worldwide. So as I said, what level have we reached? Have we really solved all the problems? I think one must recognize that there are major, very significant changes introduced by this agreement. And there are three main areas that I would like to highlight where this new agreement has the potential of making a difference. The first is the impact on sovereignty. We heard Professor Pistone talking about whether it is proper for one country to tax profits that are accrued in another country, just because the other country does not levy a tax on those profits. Well, I'm not on the subject of legitimacy, but what I'm trying to say is that the whole concept that every nation has a sovereign right to tax its residents is impacted. The proposal of global minimum tax does not require countries to raise their tax rates, does not require them to even sign on to the agreement. But when you say that a country in which a parent company is headquartered has the right to tax income which is arising in another jurisdiction, in another country, and that country does not choose to tax it, but yet you want to tax it and you are allowed to tax it, I mean, that's something which is impinging on sovereignty. Leaving aside the issue of legitimacy, as I said, what it really signifies is the tax policy now has become increasingly multilateral. As again, I found those statements very incisive of Professor Pistone. He said that once countries have agreed, then everything becomes legitimate. And that's true, that countries have agreed to that, that this sort of system will work. But then what it really means is that domestic tax policies cannot remain isolationist any longer. No country can chart its own path any longer in tax policy. Countries will have to look at the international and global environment. Multilateral agreements will increasingly try and influence in domestic tax policy, and that's one of the significant outcomes of this new agreement. Whether it's good or bad is for the times to come to tell us. Perhaps a degree of multilateralism is required to bring about that fairness in tax systems that we are all talking about. The second major change, the second significant event, is that this solution or this new consensus recognizes the importance of markets in the generation of profits. The rules of international taxation, which we have been living with for the last 100 years, were framed by the League of Nations in the 1920s. And when they sat down to allocate taxing rights or how income would be allocated, they relied on the theory of economic allegiance, which is all very fine. The theory, there is nothing wrong with that. But then they proceeded to define economic allegiance by referring to the ownership of capital, the ownership of wealth, the ownership of the means of production and supply, because that's what the world was at that time. A few industrialized countries who were controlling the means of production and supply, and the colonies where these goods and services were being sold. So, allocation rules as laid down by the League of Nations always then relied on these factors, which were supply side factors always. They never considered the role of markets. And now what we have is a solution where, for finally, because of the digital disruption, because of various other changes in the way businesses are operating, it has now been agreed that markets do contribute. That some part of the profits of multinationals, if they have achieved a certain level of turnover, if they have achieved a certain level of profitability, then some part of their profits must be ascribed to the role of markets, and therefore some part of the profits must be allocated to those markets, even if there is no subsidiary in those marketplace jurisdictions, even if there is no branch or office in that market. So that's a change, a very significant change in the way we think of allocation of income. What was laid down 100 years ago has been modified to a large extent, and this is something that we can only travel further or progress further on the road. The third significant point is that when we talk about the methods of allocation of income, once again, the global community, the OECD in particular, formulated transfer pricing guidelines as the solution for allocating income. The 1995 guidelines laid down a whole system by which the arm's length standard would govern the allocation of income amongst different entities in different jurisdictions. But this allocation system, again, was dependent on the same factors which the overall international tax architecture was based on: the production, on the supply of goods, on the intangibles owned by the producer, on the functions that were carried out by the producer. And therefore, traditional transfer pricing has never taken into account the contribution of markets or the contribution of demand forces in any jurisdiction, and has only concentrated on the supply side of factors. So here, and then the arm's length principle, the arm's length standard, which is on which transfer pricing is based almost entirely, goes along with the separate entity principle, which essentially means that every entity, every subsidiary, every small company is an entity by itself, and you can allocate only so much of income to that entity which is justified by the functions that it performs, the assets that it uses, and the risks that it assumes. And this will be regardless of what globally is the profit earned by that multinational enterprise. So the separate entity principle takes each entity away from the global picture and applies the transfer pricing rules on that. This concept of separate entity principle and the accompanying arm's length standard is once again something which has changed in this new solution. What we have now is a system where a consolidated profit figure will be arrived at, a consolidated profit of a multinational of all its operations all over the world. And then that consolidated profit, a part of that profit will be taken out as residual profit. And a part of that residual profit will then be allocated again on a formula-based approach. So there is no concept now of an arm's length standard. The principle or the separate entity principle has been given a go by. We are now looking at consolidated incomes or profits of a multinational and allocating it according to sales made in different jurisdictions. And therefore, a major departure from what has been traditionally accepted as the best way of allocating income through transfer pricing. So this again is a change which is going to dictate many changes, further changes in the times to come. Already there is the European Union which is talking about now about a plan for business taxation in Europe. It is now very seriously considering a system where profits will in Europe of each entity of each multinational will be consolidated and allocated amongst countries on a formulaic basis, regardless of what actually is the profit earned in each country. We have already the states of the United States of America, which are already following this system of formulary apportionment of income. So a major change which is coming up which has now been recognized and accepted and given a seal of approval by this new agreement on international tax. So these are, I think, the three major issues which I think we should all take note of, which do mean significant progress in taxation, in reforming the world of international tax. How do they really affect? Do they really bring about stability? Do they really bring about fairness? That's something which one can have many different views on. India and most of the developing world would say that it is still not a fair and equitable system. What we had started out was trying to get adequate amount of tax from highly digitalized business models, which could earn massive profits by using the data that was contributed by the users and could therefore exploit market jurisdictions and earn profits without having a physical presence. Now, those issues, those challenges have not been addressed. What is the contribution or the importance of data has not been addressed. What is the difference between a digitalized business model and a normal distribution model has not been addressed. So there are many things that can be said that the system is still not fair. The system still needs to be evolved. And certainly cannot be said that we have achieved nirvana in international taxation. I think there is hope for the future. There is a definite progress made on these counts. There is the upcoming ESG agenda, the environment, social and governance agenda. And I'm not talking about environment taxes, but the ESG agenda as a whole is based on the concept of fairness in taxation, a system which can generate sustainable tax revenues, and that's a term we have been hearing off and on in this morning and afternoon. But yes, that's the road for the future, a system that can lead to sustainable tax revenues. And that sort of a fair system can be achieved only if we travel much further on this road and try to address the issues that Professor Pistione has been mentioning, the concept of nexus, the concept of allocation of income according to a fair and equitable standard. that's where I would like to end. And as I said, there has been considerable work done. There is considerable work required to be done. But I think momentous changes in the world of tax. Thank you very much.
Thank you so much, Mr. Ranjan, for sharing your valuable insights. And it's time I request the chair of the session, Mr. G.C. Srivastava, to please come on the dais and share his special observations about the session.
Friends, after such a really critical exposition of these proposals by Mr. Akhilesh Ranjan and also by President, there is hardly left anything to say, but one I just like to say so one thing, that really this year 2021 seems to be the year for very, very significant path-breaking changes, be it the withdrawal of the retrospective amendment in domestic legislation, or this is going to come. See, I recall distinctly that India was one of the first countries which has gone into the question of electronic commerce and digital. And the High Power Committee on Electronic Commerce submitted its report way back in somewhere around 99 or 2000. And when this report was presented to OECD in one of its meetings, and I was there to present that meeting, and I vividly recall the degree of resistance that was there in the group, barring some bit of support from a couple of countries, and let me not name them. The rest was hostile. And the argument was that if the multinationals are not using the infrastructure of your country, then how do you get the right to tax? I'm not physically present there. I don't use your economic infrastructure. I don't use your social infrastructure. Then how do you get the right of tax? So the right of taxation was dependent on the use of the infrastructure. And that's what physical presence virtually meant. And that concept of the permanent establishment, which worked for, as you pointed out, Mr. Akhilesh, worked for close to a century. Now, the best thing is, now that is getting recognized that with the growth of technology, that is not workable. So the permanence of permanent establishment is gone. And that is one good sign I see into it. Because that could not have worked, and that did not work. So all complications arose because of that, whether it really on the characterization of income, on the taxation of income, and so many other issues, even intangibles on that part. So therefore, I really welcome this change, and I know there are limitations, but I'm certain that once as a concept it is recognized, that physical presence is not a necessary element for getting the other country right to tax. And then a global consensus is required, the multilateral arrangements. If these are recognized, then I think, yes, a lot of battle is won. And I believe the rest will follow in the years to come. Because even in 2001 meeting, I recall that there was a faint suggestion of formulary apportionment, even at that stage. So either we had that stage, the talk was either you have virtual PE concept, or you have formulary apportionment. So now once that formulary apportionment in principle is getting recognized, yes, the formula may not be correct, may need some improvements. Still, it's a welcome move, and I believe that should work. With the times, one more session to go. I don't want to deal further. Thank you very much, and I must compliment Shailendra and Tiol team for a beautiful organization of this award function and also this congress. Thank you very much.
Thank you, Mr. G.C. Srivastava, former Director General of International Taxation, CBDT, Ministry of Finance, for chairing this session. And now we move on to third and final session of this TOIL Tax Congress. This session is on, is Indian GST still on track? To chair this session, we are being joined virtually by a very special guest, that Mr. N. Venkatraman, Additional Solicitor General of India. A senior advocate in Supreme Court of India. He is, of course, the Additional Solicitor General of India, as I mentioned. He is a noted jurist in taxation and commercial law and one of the most sought-after counsels in the Supreme Court. Mr. Venkatraman is one of the youngest advocates to be designated as a senior advocate in the year 2006 at an early age of 39. He is one of the finest exponents of GST laws in India. We are very honored to have him join virtually for this session. So he will be here listening to both the speakers who would be presenting a part of this session today, starting with Mr. Prateek Jain. I would like to invite Mr. Prateek Jain first, who's a chartered accountant and a veteran in the industry in terms of experience and expertise, particularly in the domain of goods and services tax and customs. He's presently partner, PricewaterhouseCoopers at Gurgaon location. Please welcome Mr. Prateek Jain.
Thank you. And I have just put my stopwatch on. I'll not take more than 10, 12 minutes. It's a topic which could take forever, right? Whether GST is on track, the debate is still out. But I'll just mention that, maybe let's just start by saying that when GST came in, what were the key expectations? I think the mistake that we make very often is we compare GST of 2021 with what was happening in 20 and what was happening in 19, and not. Okay, Mr. Ram is saying something, or okay. So there were three key expectations from a reform like GST, right? One is simplicity, second is stability, and third is transparency. And perhaps I will just allude upon a bit in these three categories that what I believe we have achieved, and we have phenomenal achievement to look at if we look at last 4 or 5 years. Starting with simplicity, one nation, one tax. There were different tax laws in different states. There were Form C and Form D, and there were supply chain obstacles. When we work with large multinational corporations and other Indian corporations, the pricing was a challenge. IT systems were a huge challenge. And I had to align my business in accordance with tax laws. So I had to have warehouses in different states because there was a CST which used to operate, and I used to do work on a stock transfer model. So what GST, to my mind, has achieved is a significant improvement in ease of doing business, clearly. Supply chain has become more efficient. There are empirical data now available that 25 to 30% reduction in time taken from movement of goods from Kashmir to Kanyakumari, for example. So clearly that's one area. From a business standpoint, my pricing has become simpler because all states have one tax rate. IT systems have become much more simpler. And all of that is reflected by the World Bank ranking that we have seen a significant improvement on since GST has come in. And I think that trend is going to continue. The second aspect, which we very often miss, is the physical interface with the department has reduced significantly. And for any tax system, a successful tax system, it is necessary that the interface between the taxpayer and tax administrator is more and more digital and less physical. So that's clearly one. Of course, we have moved a lot in that journey, but there are still few things which, to my mind, need to be looked at. One is the structural simplification. Of course, there's a lot of discussion about widening the tax base. Till the time petroleum products and land is outside GST, that means a significant portion of economy is still out, and we need to kind of look at that. That will take time, particularly the passenger fuel. But maybe things like ATF and natural gas we can start with. The second is the whole process of reconciliation of vendor payments when I claim the credit, and that is leading to a lot of litigation, a lot of disputes. As an assessee, it's very difficult for me to determine whether the vendor has paid tax or not, right? And so long as I have the tax invoice with valid tax, the question is, really, why do we make the purchaser responsible for that? But that's more a policy decision. Third is the administrative simplification. I think this is the biggest one today when we look at, just like faceless assessment, which has come in income tax. Is it a good time to start thinking about faceless assessment under GST? Today, if I'm a service provider, let's say if I'm a telecom company, I have 28 different registration, different states. Different states will assess me differently. Center will assess me differently. Today, we have seen early signs of audits and assessments, and we have seen a lot of disparity in terms of the way different authorities are approaching this. Legislative simplification, I think, is a low-hanging fruit, really. Just to give you an illustration of input tax credit provision. Today, all the employee-related provision, expenses are not allowed. Can we look at as an option of assessee, for example, that I get 90% of the credit at my option? I don't want to go into the details of all expenses and scrutiny. I say based on my trend that I'll take 90% or 95% of the credit. So these are the things which are simple. Also, a lot of taxes that I pay and I claim a refund of later. We have global principles like EU. You don't pay under reverse charge and then claim a offset, just a debit and credit in the books. You don't pay tax and then claim a refund, right? So some of those things have to be looked at. Judicial part of it, and I think, of course, Mr. Venkatraman sir will perhaps allude upon that, is that a lot of work needs to be done. Advanced ruling as a principle, as a concept, has not been successful. Different states are taking different views. We are talking about National Advanced Ruling Authority. The tribunal has not yet set up. So for every commissioner order, I have to go to High Court at this point in time, and that's leading to a lot of issues. The second part, of course, is stability part of it. All of us know that initial 1 or 2 years, we really struggled in terms of technology, the GSTN. But look at the world-class infrastructure that we have created. I think a lot of people forget the kind of scale that we have achieved there. And now when we talk to global sort of companies and different governments, a lot of governments across the globe is looking at Indian model and looking at how do we implement e-invoicing, how do we implement reconciliation process, etc. 71.9 crore returns have been filed till now by 15th of August. And I think that's a significant achievement. It's not I think it's not a fluke, so to say. The tax base has expanded from 66 lakh assessees to 1.3 crore in last 4 years. And I think it's phenomenal. Even during the pandemic, consistently for last few months, barring 1 or 2 months here and there, we have achieved more than 1 lakh crore as a tax collection. All of that means that, and there's a lot of people who would say that for smaller businesses, GST has not been that great. And I think, but the data proves otherwise. And up to 40 lakh, of course, you don't have to pay GST, and then you have composition scheme and so on and so forth. Technology-driven compliance mechanism, we've spoken about that, but I think the newer concept like blockchain is going to come on e-audits and things like that. Artificial intelligence is going to come. User experience concepts are going to come. And I think government is far, far ahead from compared to industry in terms of technology. What are a couple of things that we can perhaps do in this area? One is, time has come to look at a white paper on GST. That what kind of GST do we want in next 5 years, in next 10 years, and 15 years? I think government has done well that legislative changes have not been that frequent. Of course, there are tax rate changes, and there are some few changes that have happened because to take care of some judgments and things like that. But white paper, I think, is important. Rate structure, already work is on. I think it's going to be simplified. It's a matter of time. I'm not too bothered about the rate structure part of it. I think it's a process. But we have to note that the effective tax rate today is much lower than what you had before GST came in. And then, therefore, the prices, of course, have come down for most products and services. Introduction of facility of revision of return. I think those are the things which people have talked about a lot, which is required. The other point there on stability is the anti-profiting mechanism. And I think time has come to say goodbye to this, because already 4 years. Of course, today we don't have perhaps the chairman as well. But till what time do you want to impose a mechanism like anti-profiteering? Every time the rate changes, the industry is not sure how do we do the pricing. Forget about the rate changes. Even if I get a credit which I was not getting earlier, there is already an issue. The last sort of segment that I'll talk about in not more than 1 minute is the transparency part of it. And this is also, I think, the great achievement of GST, that it has reduced the discretion available to the tax authorities. So GST Council is a body. Of course, most of the decisions have been taken by consensus. But earlier, any state could have just got up and said, I want to increase the tax rate, VAT rate on a particular product, right? Or reduce the VAT rate on a particular product. And that would mean that, I would have an opportunity to go and, lobby with a particular government. Now, all of that has stopped. A GST Council is a much more transparent body in that sense, right? You have minutes of the meeting, you have discussions, you have, deliberations. Media is covering that extensively. We know what is the logic, why a particular decision has been taken. So much more transparent system which has come. There are few things there which, of course, the government, and we have gone to the government and talked about it, is that we don't have a forum today where the industry can go and represent. Because GST Council has a lot of stakeholders. Of course, the central government, it has all the state governments. Of course, you have bureaucrats from belonging to the governments. You have various committees, fitment committees, and so on and so forth. We as an industry, we are not sure who to go to, right, and talk about it. So in between, there was a few sectoral committees which were constituted. I think it's time to kind of look at those committees again and provide a forum for the industry to come and talk about it. There is perhaps also a good time to introduce a one-time dispute settlement scheme under GST, because a lot of things have happened over the last 4 or 5 years, and perhaps industry deserves now an opportunity to pay whatever taxes, interest, etc. that they have not paid for want of clarity. Also, there has to be better center and state coordination. Is one area where industry is really concerned about. Things like Kerala coming up with a cess, or a particular state saying that I will not sort of consider the circulars issued by the central government. I think where it is leading to, and one worry which a lot of us have, is that when the GST compensation is gone, right, then will that be enough glue in the GST Council so that all the states will continue to work together? And that, I think, is important. So in conclusion, I would just say that if the topic is GST is the right track or not, all the empirical evidence, whether you look at from a government perspective, tax collections are going up, taxes getting widened. From a consumer perspective, they can see the taxes on the invoice. It has become much more simpler to do business. So GST is the right track. Have we achieved what we wanted to achieve? Let's say, when we started GST, perhaps not. And therefore, that's clearly, you can look at glass half full or glass empty, but directionally we are there, and the whole world is looking at us, and we should be proud of what we have created. Thank you very much.
Thank you so much, Mr. Prateek Jain, for sharing industry's perspective on the Indian GST. Now, I would like to invite the next speaker for this session. That's Mr. S.K. Rahman, Principal Commissioner and former Joint Secretary, GST Council Secretariat. Mr. Rahman.
Dignitaries in the hall and dignitaries who are there online, and respected Chair Venkatraman sir, very good afternoon to all of you. It's indeed an honor to be associated with Tax India Online, particularly on this occasion of Tiol Awards 2020. For the topic that is being discussed, Mr. Prateek has covered most of the issues, but to have a government perspective, I thought I'll just present it through a presentation. May I have the presentation? No, not this one. Second. This is not mine. No, this is not the presentation. My presentation is different. This is somebody else's presentation. I have been associated with GST right from the starting. 1st May 2017, I have been transferred to Delhi. I've been associated with it in the form of from DGST, where we had extensive discussions with the stakeholders. Then I was also looking after SVLDRS, Sabka Vishwas Legacy Dispute Resolution scheme, to do away with central excess legacy and service tax difficulties. Then I joined GST Council Secretariat. So we were dealing with a central government and 28 states. I mean, the entire journey, if you see, the highest credit and the biggest credit should go to the trade and industry, because they have joined us, they have borne the difficulties, they had the greatest resilience to come back and stay on track with GST. And in between, of course, you have seen for last 1.5 years, the COVID effect was also there. So if you see, summarize the entire thing, yes, what Mr. Pratik has said, what we wanted to achieve, probably we could not achieve. And I hope all of us agree our target should be something which is slightly higher than what we should have achieved. So otherwise we'll say, Sandhya, we have achieved, everything is over. So looking at that, yes, it has been a difficult journey. And in this journey, the stakeholders are both government as well as the trade and industry. It has been a good partnership. I mean, if you have noticed, the government has been listening, government has been amending notifications, government has been amending the even legislation, has been changing the laws and procedure. So that itself shows that, if you see when compared with central excise and service tax days, where we used to only make the changes once in a year, here we have been doing almost, every month as per the needs of the trade and industry, at the same time protecting the interest of the revenue. So I would be presenting you just the right from evolution, 4 or 5 themes where probably you will be able to understand the difficulties from the government perspective also. First one is about evolution of GST. If you have seen, yeah, by the time they make the thing ready, I'll continue. Evolution of GST, if you have seen, started almost 10 years before 2017. From the time the preparations have started, we can go to the first slide, please. To answer that question, whether we are on track or not, you'll be able to do it if you see slightly the background. 4 years, I mean, it has been 4 years, almost 50 days now. If you, this is yeah. Yeah. No, if you see the objectives of GST, yes, the broad objectives have been, ideal. We wanted to achieve a lot of things. I mean, one thing you would have seen that many of these objectives are partially achieved. If you see the journey of GST starting from, let's say, 2000 onwards, there have been a lot of meetings. I mean, a lot of persuasion had to be done with the state governments. A lot of preparation has to be done, as constitution has to be amended, and the new laws had to be brought both by central government and state government. I mean, it has been an hectic journey starting from almost 2000 to 2017. Finally, I mean, the 1st July 2017, the law has come. And even after that, we have continued with a lot of changes. If you have seen, major changes have come in November 2017. And during this period, we have been trying to amend the act a little bit, change the rules extensively, bring out a lot of clarificatory circulars. And if you have seen, 161 circular, so many notifications, so many groups of ministers had to work. I mean, so many subcommittees have to be formed. I mean, these are all the work that has gone. And in the result of that, if you see, as on 1st July, let us say, there are around 1.28 crore taxpayers that are to the GST. There are around so many returns that have already been filed, around almost 70 crore returns. I mean, the amount of tax that has been collected is almost 10 to 12 lakh crores per annum for the last 4 years. And the amount of e-invoices issued, amount of invoices that have been raised, amount of returns that have been filed have been tremendous. Somehow it has been a very difficult task to achieve, but the numbers prove that yes, we have achieved to a certain extent. If you see the journey, it is not over. I mean, the journey continues because we are on the track, and this we are supposed to go long way. I mean, if you have seen prior to 30th June 2017, 18th meeting we had. Post 1st July 2017, we had 26 meetings in 48 months. I mean, a total of 44 meetings in 4 years. I mean, GST Council, I have seen working in the GST Council Secretariat to convene a meeting, to prepare an agenda, to make agree people come along. And there's a lot of background that happens, works before this happens. So, there's a law committee meeting, there's a fitment committee meeting, all these people bring around, and then the consensus will arrive. Even the smallest opposition from any of the states till now would have been it has been a very difficult task to convince them and to go along. And if you have seen a federal, it was kind of a unique federal handshake. I don't think anywhere in the Indian history, I mean post independence, it has happened where the central government along with 28 states and 3 union territories sitting together and bringing about changes in the tax laws. If you have seen the earlier, what I mean, if you quickly run through, let's say, I mean, if you compare for the last 4 years, if you quickly come through, we were not having service tax, we were having the VAT that has gone, we were having the excise duty, we were having the CST, all that has come and got merged into GST. If you have seen, it's a kind of unique federal body that has been created called GST Council, and the main theme behind this is collaborative federalism. Every state and central government more or less has equal right to decide about it. And the strongest backbone is non-intrusive IT system. This IT system has given us a lot of strength to proceed further. Now, if you've seen salient features of GST as on date, if you look at it quickly, I mean, I will make a quick rush through. One is most important thing that I've seen at macroeconomic level is the formalization of economy. I mean, the unorganized sector, which was not there into the tax net, they have come into it and they have joined and they started enjoying the fruits of ITC. If you quickly run through 6 or 7 changes, the activity, if you can see, for a trader, importer, for a manufacturer, everybody has been brought into the same platform. If you see supply, whether it's a good supply, whether it's a services supply, both have been equalized. If you see it on the cost price, whether it is an intrastate supply or whether it's an intrastate supply, that has become equivalent to the GST. If you have seen number of branches of a companies, whether it was a interstate branches, everything has been neutralized in GST. If you have seen location wise, whether your factory is located in one state or in another state, it doesn't matter now. We have come onto the same platform. If you have seen offline, what we used to do, lot of business, lot of taxation related job, now we have brought onto the digital side. If you have seen the issues that have addressed, I mean, most of the issues I remember I have been associated with from almost July 2017, as I have seen, have been solved online. There was no other way. We started our journey on 1st July 2017. Issues coming along, I mean, we were trying to address them, we were trying to understand them, we were trying to solve them as much as possible. Like so many clarifications have been issued on the basic levy, valuation, place of supply, terms of supply. I mean, every kind of thing, time of supply, and special, SOPs have been brought also to address them. And if you see the entire process in the last 4 years, everybody has got some other thing. The government, the taxpayer, the consultants, the tax professionals, tax authorities, more or less everybody has got some or other thing to, out of the GST introduced. Now, if you see quickly run through the changes, if you see the registered taxpayer, pre-GST to post-GST, you have seen the large numbers that have been added quickly one by one. If you have seen the compliance level, pre-GST compliance levels for manual, now we have come on to online. If you have seen returns, pre-GST, so many returns used to be there. Today we have only 3B return and GST are one. If you have seen the authorities, pre-GST, so many authorities used to be there. Now we have only single authority, CGST, SGST. The e-way bill has come and it has removed all the checkposts. Whereas we used to have, lot of other difficulties with lot of state governments. Now we have only one e-way bill portal. If you come on to the ease of doing business, as you have seen, ease of doing business ranking used to be somewhere around 142 in 2014. Now it is, 2020, last time it was announced it was 63. GST to large extent has contributed for increasing the ease of doing business. You talk of registration, you talk of amendment or cancellation, it has become everything as online. If you talk of refund, that is completely online. There is no such any refund application that is being treated. If we talk of input tax credit, what we used to take earlier, now what we are doing, it has become completely seamless flow of credit. Of course, certain blockages would be there here and there. Tax rates, if you have seen different tax rates that are available, presently we are having a simpler 5 or 6 tax rates that are available. If you focus upon, let's say, ease of doing business alone, if you are seeing multiple returns to single return, if you are seeing multiple payment dates to single payment date, and if you see especially the growth of 142 to 130, 130 to 100, 77 to 63, if you take one of the factors as, let's say, paying of taxes as one of the criteria, then you can see that our criteria has been much better when compared to many of the countries in the world. I mean, the ease of doing ranking because of payment of taxes has also increased from 172 to 115. That's a better index. Now, if you talk of rate structure and rationalization, it's a continuous process. If you see starting, if 226 items used to be on 28% rate, but today if you are seeing hardly there are around two only items, that is automobiles and cement. Even though there are mentioned around 20 items, small items that may or may not matter, the shrinking tax rate, I'm able to project it to you, are able to see that the average rate, if you have seen pre-GST and post-GST, we are much less than what we are supposed to be. If you have seen 15.3%, if you have seen 14%, today we are around 11.6, which was much lesser than what has been actually recommended. If you have seen on revenue performance, more or less in initial few years, we were less than 1 lakh crores. We are not achieving what we are supposed to have achieved. Of course, big various factors, including macroeconomic factors, but looking at the GST trend in the last 8 months, we are not bad. I mean, we have been doing above 1 lakh crores. Only thing that has setback has happened was obviously the COVID that has struck. If you've seen 1920 when compared to 2021 revenue, in April and August, we had the biggest casualty, both in terms of course, it was a national lockdown, and because of that, our revenues would have got affected. Our revenue is an indication of economic activity in the country. Now, if you take a few initiatives that have been taken, which we are trying to, do, of course, the government is trying to do a lot, but some of them which I can showcase is obviously the QRMP scheme, that is quarterly return and monthly payment. We have also said a lot of changes have been brought on the composition scheme. And for the nil returns, it has been just you have to send an SMS saying that it's a nil return, and exemption limits that have been changed for the annual return as well as for the audit return have been very convenient to the taxpayers. If you have seen QRMP, I think it is slowly picking up. Certain modifications are required on that. If you are mentioning about e-invoices, I'm quickly rushing through because most of you are aware of that, but a quick refreshing of the memory obviously will change our attitude to see what exactly has happened and what may happen. If you have seen e-invoicing, I mean, 2017 we started, e-way bill we have introduced. Then if you see Rule 36(4), we started with 20% variation to right now we have reduced it to 5%. If you're talking about e-invoices that have been introduced, is one of the successful thing that has happened in GST. Now only for B2B it has been running, I mean, it's doing very well. And for QR code also we are introducing for B2C. Date has been announced, but we had to postpone because of the various factors. Now, if you see the return system also, even though it may look complicated, but if you are able to utilize e-invoicing system, then automatically the e-invoice data gets populated into GSTR1. Once you are clear about what is your outward supply, the data of GSTR1 is getting populated into GSTR3B, and you are able to file the return. And it's not very difficult if you start right from your e-invoice test. Now, there are difficulties from the government also. Some of the measures that we have taken, probably industry may be criticizing, industry may not be appreciating. They may think saying that why the government has to take, because you always remember trade facilitation and trade enforcement. I mean, law enforcement will have to balance each other. One has to balance these things to take care. So certain measures we have been introduced in last year. I mean, today, the very fact that 1 lakh crore revenue is coming per month is only because of these trade facilitation measures that have been introduced. Because you know very well the kind of fake invoicing, the kind of misutilization of ITC that has happened was tremendous, which was unbelievable. And looking at those, we had to introduce those changes. I hope, I mean, I should thank the trade for bearing with us and, trying to accept those changes. But looking at the trade facilitation side also, if you've seen, during especially COVID-19 of 2020, if you've seen, a lot of changes that have been, I have been at the forefront understanding the trade needs and trying to put it across in the law committee meeting as well as getting it done through the GST council. For example, if you see expedite the refunds that has been done and what kind of facilities that have been given for the people to operate from their homes, and a new section of 168A has been introduced to do any kind of emergency situation. Waiver of penalty has been done, waiver of reduction of the interest has been done. If you just recall, e-way bill which has been expired has been also given. If you see, lot of changes have been done in TCS, TDS. If you talk of the 2021 COVID, I mean, which has struck again as a second wave, there also similar measures have been introduced. In fact, we have gone 2 steps forward than what has been done. We have introduced amnesty scheme for the people who have not filed returns. We have facilitated to a large extent COVID-related material. If you have seen, I mean, many of the COVID-related materials, the rates of duties have been reintroduced, I mean, reduced in 44 GST Council meeting. I mean, a lot of step has been taken to cater to the needs of people in facing the COVID situation, both on economic front as well as on the health front. If you see way forward, how exactly are we going today? I'm not making any official statement because I'm not supposed to make any such statement here. What I am seeing is only I'm just listing out what are the areas that are left over. I mean, it's up to the GST Council as well as the government of India and various state governments to choose which one to go, what are the things. I just brought out few items that probably require certain thing. One of the most thing that is talked about is the bringing 5 petroleum products into GST. GST Council will have to decide a date from which these items will be coming into GST. I will say about a certain important aspects that probably the trade as well as the governments will have to bear in mind. One is about the cooperative federalism, because the way GST Council has been working, most of the decisions have been anonymous decisions. I mean, everybody has agreed upon, excepting few. Excepting only one time we had that difficulty. As the days that are going to come, the unity of between union government as well as the state government is one of the very, very critical aspect that is going to bring us forth. And if you see rate rationalization, this is something our present revenue secretary has also announced something that it will be considered. If we talk of blocking of, I mean, blocking of credit at certain things, that is also being talked of, especially on the real estate sector as well as on the restaurants. And avoiding inverted duty structure has been on the main agenda of the council. It has started with mobile phones, and one slide behind that. It has started with mobile phone, and it is going to one slide just behind that. You have skipped one slide. And they have started doing with mobile phone. Then some more also they will be doing. I mean, whatever the trade that has been asking and whatever be the required for the government, we have been doing it. I mean, the journey never stops. Whether it is on track or not, it is up to the time to decide. I am very sure in this journey that is going to continue. Lot of support is going to come from, just one more slide after this. Lot of support is going to come from the trade and industry, where just one more, one more. One more. Here it is. Yeah. If we come here, next slide, please. Appellate tribunal is something that is on the cards, that has been talked about. I understand the difficulties that people had to rush to the courts, and there is a lot of things that are being discussed at Advanced Ruling Authority, National Advanced Ruling Authority. There's also incentive schemes that are being talked of for B2C, where there could be possibly leakage. And they could be also much focus on the days, months and years to come on the GST practitioners. And looking at this, there's a lot of work to be done. And in this entire journey, it is the stakeholders and the government who have to work hand in hand. The government is coming forward 2 steps forward. And I'm very sure I'm very sure the trade and industry also will come forward and support. As you have seen, to realize the dream of 5 trillion, economy, and to realize the difficult times to come, the years of 2021 and 22 are going to be very, very crucial. And taking this opportunity, I would like to plead to the trade and industry to cooperate with the government, to work together. After all, government is also one of the stakeholders. Let us work together to make India as a proud nation. Let us work together in these difficult times, whether third wave is going to be there or not. I mean, we have to live together ultimately. If these years of 2021 and 22 are going to be very, very crucial, if we work together, both the government and the industry, I'm very sure India is going to realize the dream. India may become the economic superpower also, but
imagine if you miss this bus, I think it will be very difficult for us to come up. So I take this opportunity to plead on behalf of the Government of India for greater cooperation from the industry. I thank Shailendra, I thank the entire team of Tax India Online for giving me this opportunity. Thank you, sir. Thank you, Ananda.
Thank you so much, Mr. S.K. Rahman, for that detailed and extensive presentation. Mr. N. Venkatraman, Additional Solicitor General of India, has been chairing this session, and at juncture, I would like to request him to please join in and share his special observations about this session, and with that, also conclude the TOIL Tax Congress. Mr. N. Venkatraman.
Am I audible and visible now?
Yes, sir.
Thanks. Thanks, Shailendra. Thanks, Sridhar. And hi, Pratik. And namaste to Rahman, sir. In fact, two very, very illuminating, though short, quite specific punch point speeches by both Pratik and Rahman, sir. I'll just add a few. I am the last speaker, as she says, and I hope I will last as a speaker at 1:45, all ready for lunch. So let me take the brief possible time to conclude. Having touched on, see, there are three verticals in GST which we should be very, very thorough about: transformation, transparency, and technology. The entire law can be bundled into these three verticals. And both the speakers touched about the three Ts. But what you actually need to know as representing industry or representing the as practitioners is what is actually the type of cases that is being heard by courts. I thought I'll spend my time on that leg because two important data given by Mr. Rahman and Pratik are quite assuring. From 60 lakh assessees, we have now transformed into 1.2 or 1.3 crore assessees. And from 130th country, we have improved ourselves as a 60+ country in trade and business. So this is, if somebody wants to know, has GST done something? I think these are two things which we can certainly showcase. Now coming to the interpretation and the judicial front, these are the types of cases which is being heard, because these are all in different stages. I don't want to be narrating the intricacies of the law because it's pending before the court, but you should know the issues. Supreme Court in Moti Minerals held that even though GST aims at subsuming the taxes into one whole, still Constitution empowers a charge of cess over and above GST. That has been sustained. And that's how we are able to impose 160% cess on tobacco products, which is a large chunk of revenue for Parliament. Now, while subsuming these taxes into one, a dozen taxes into one, we have kept a few deliberately outside the ken of subsumption. One is, as I said, the tobacco products, which is with the union, alcoholic liquor for human consumption, which is with the states. And of course, petroleum product is said to be subsumed. We are just finding out the auspicious day to do it because we are a federal. Why have we done that? And naturally, stamp duties are still also with the state. So the three basic milking cows, petroleum products, alcohol for human consumption, and stamp duty is still outside the ken of GST. And that's how we are able to maintain a good federal balance. It's not that easy to run a nation of this size with multiplicity of opinions, multiplicity of governance, and still go by 99 out of 100%, a majority unanimous opinion in the GST Council. Now, the types of disputes that arise for considerations. When we argued for 4.5 days before the Supreme Court a week ago on the inverted structure, which Mr. Rahman was saying that we are planning to ensure that it doesn't happen. So a question arose: is it a time to integrate goods and services into one whole packet in terms of rate, in terms of uniformity? This was the questions that are all being debated about. So the jurisprudence that is evolving is, when policymakers have their own choice, constraints, limitations, and necessities, how does court view policymakers' choice? What should be the kind of synergy which both should place together? It's a very, very interesting debate which has happened for 4-5 days, 4.5 days. To say that one view, which we have certainly expressed on behalf of the government, is policymakers' choice should not be interfered with because it interferes with the basic structure doctrine. The limitations has to be understood only by a policymaker and not necessarily by courts through interpretation. So we'll have to wait for the judgment to come. This is one issue. The second interesting issue which is being battled again in the courts, in one of the high courts, is interestingly, petroleum is yet to be subsumed. Alcohol for human consumption and stamp duties are outside the can of GST. Whereas when it comes to tobacco products, it is subsumed into GST and it is also kept as a can in entry 84 list 1 as part of excise duty structure. So today tobacco products suffer a very small basic excise duty, a NCCD, a GST, and a compensation cess. So the interesting constitutional question that has come up for consideration is, when something is part of 246 capital A as GST pool, can you still impose excise duty on such a product? So this is a very, very important and an interesting constitutional debate which is happening in the courts. Lions argue for the other side, and we are going to do our reply on Monday before one of the high courts. So these are all the evolutionary conceptual points that is emerging. And of course, the third angle, which we may be debating after 4-5 weeks in the Honorable Supreme Court, is about we have talked about the concept of cooperative federalism in terms of 279 capital B. So one of the issues likely to come up for the consideration for the court is, what is the constitutional status of this GST Council? It has a constitutional status. It's not a legislature of a state or a parliament. It's not an executive of the state or the center. And it does recommendations which unions and states necessarily follow and translate into law or notifications. So this is a moment of trying to say this is a perfect cooperative federalism. So how do you designate this body in terms of jurisprudence? It has a constitutional status, no doubt about it. But how do you designate it? Is it a legislative body? Is it an executive body? Is it an administrative body? Or it's a constitutional body in which all these are rolled? India is not unfamiliar with all these terrains. If you see the regulators, the various regulatory laws, TROI, gas, insurance, SEBI, Competition Commission, you read any regulatory law, the roles are multifold. It will be advisory, it will be administrative, it will be quasi-judicial, it will be recommendatory. So there are multiple roles played. So this is again going to be very, very important issue that will come up for consideration, say 5-6 weeks from now before the court for its consideration. So courts at the moment are dealing with this new jurisprudence of GST law. That's the message. I thought, because it's an important tax conference and I should leave it with you. And it will slowly boil down to various other issues which both of them have said. We need to have the GST in place, GSTAT in place at some point of time. And the working of the advanced ruling authorities, in fact, Principal Commissioner is here, we've been talking also. So it's time that we have unified bodies of AAR, giving due representation for each state in that body. So that representative will deal in the matter from that state can be a member, so that we avoid plurality or multiplicity of conflicting opinions, and the uniformity is achieved to the best extent possible at the quasi-judicial stage. This is one recommendation which we are certainly placing it for consideration. And two, on Tran 1, we have been talking to the government and we are trying to resolve it to the best of our abilities. And finally, a request is made when Pratik was saying we don't find a forum or any such thing. If you have got, instead of going on saying this is right, this is wrong, so you can't compare Indian GST with any other. For the simple reason, the size, the volume, the bandwidth. Where do you find 1.3 crore SSCs in one day? Anywhere in any part of the world under the GST system. So we have our own unique styles, therefore unique limitations. So if there is something to contribute positively, please reach out to us, because government is interested to ensure good ideas get integrated. That's the message I thought I should leave it last in your mind. Pleasure to have addressed this audience. And thank you once again, Shailendra and Sridhar. Namaste.
Thank you so much, Mr. N. Venkatraman, Additional Solicitor General of India, first for sparing time to be a part of this TOIL Tax Congress, and then, of course, sharing your deep insights and suggestions for industries and everyone at large to follow. Thank you so much, sir. Thank you. And with that address, we officially conclude the TOIL Tax Congress. But before I move any further, I would like to point out to a special book counter that we have made at the back of the audience, if you could see at the back of the hall, where you can get hands on the book COVID-19 Genocide Without Parallel. And what's special is that if you get hands on it today, you can actually get the author, that's Mr. Shailendra Kumar, actually signed for you. So make sure you do that on your way out of the hall. So I'm sure it's been a great learning experience for all of you, listening to so many stalwarts from diverse fields sharing their expertise on matters of importance today. And we hope that this Congress has been as enriching experience for you as it has been for us. On that note, I would like to request Mr. R. Sridhar, TIOL Award Committee Coordinator, and Mr. Rishabh, Member Core Committee of TIOL Awards, to please present the vote of thanks.
Sorry for the morning small hiccup. I think it's time to apologize second time also. It's a real honor and opportunity for Rishabh and myself to present this vote of thanks. Perhaps this event was ordained by the will of TIOL Knowledge Foundation, delayed by the pandemic, creating havoc, but blessed by God to happen on this day. So it happened. Being a red letter day for TIOL, I must say a knowledge leader in dissemination in the areas of fiscal, economic, and other laws. We find this event a platform which will really herald the future. Firstly, we profusely thank Justice Vineet Saran, who could not make it today due to some family exigencies, but he gave us a big boost to our motivation to carry on with our great work. I mean, he really said so many good things when we met him 2-3 times, and he was very encouraging. We thank Honorable N.K. Singh, Guest of Honor, the Chairman of the 15th Finance Commission, for sharing his international perspective and vast knowledge of ideas in the areas.
I take this opportunity to thank Mr. A.N. Jha, Mr. G.C. Srivastava, and Mr. Binay Kumar for joining us on the short notice and benefiting us with his insightful views. Next, we thank Mr. Ajit Kumar, the CBIC Chairman, and Shri J.B. Mohapatra, Chairman CBDT, and Member Customs, Mr. S.M. Bhatnagar, for sharing us the revenues perspective in an illuminating manner. We thank the entire member of the jury, the former CJI Justice R.C. Lahoti, Justice R.V. Ishwar, former Finance Secretary Shri Sumit Bose, Mr. Ashok K. Bhattacharya, Editorial Director, Business Tender, Dr. Girish Ahuja, Member Direct Tax Task Force, Ms. Praveen Mahajan, former Chairperson CBIC, Mr. M.C. Joshi, former Chairman CBDT, for having participated in the jury panel deliberation and having consented to participate in the function. Due to his prior commitments, I think retired Justice Shri Ishwar, Delhi High Court, could not participate in the proceeding. For making it live and enlightening session at TIOL Tax Congress, we extend our gratitude to Mr. Dharmakriti Joshi, Mr. Akhilesh Ranjan, Dr. Pascal Piston, Mr. N. Venkatraman, Mr. Prateek Jain, and Mr. S.K. Rahman.
We thank Sanjay Agarwal ji, Chartered Accountant of DSRV LLP, who audited the process and helped the jury panel with their independent views. Our sincere appreciation and warmth for the unconditional support of all the sponsors of both the awards and the Tax Congress who have supported us in this venture. Our sincere appreciation to Sutra, the event partner, Digital Hive, and third-party IT support teams who have assisted in this exercise. We must not forget the contribution of Mr. Sudhir Thomas for his creative guidance in this whole event, extending over nearly 12 months, lending his artistic touch to the event. Our deep recognition for the efforts put in by Mr. Shikhar and his entire IT team for having handled this vast exercise during the designing stage and post the designing stage. Our humble thanks to the staff of the TIOL core team, the other staff of the editorial teams at Mumbai, Hyderabad, and other locations who have ensured the success of this event. Our special thanks, I must say, to Mr. Gajendra first. Secondly, to Rishabh, my colleague, who's been a great support partner on IT concepts and other things from GST Street, the hotel authorities of Taj, the participants, the winners of TIOL awards, and above all, the subscribers of TIOL who really hold this together. Participants of this event, both physically and digitally. We will endeavor to raise the bar next year and hope to pray that 2021 awards function will be held in a grand manner. And I must say, physically, I would like to make this physically, where interaction and exchange of ideas, and there will be no technology issues, and learning will be the hallmark. Wishing you all a safe, balanced 2021, bearing in mind that we must overcome the predicted, forecasted third wave with as minimal impact as possible. God bless India, the world at large, Vasudhaiva Kudumbam, and every citizen of India and TIOL at last. Please join us for lunch.
Thank you so much, Mr. Sridhar and Mr. Rishabh, for delivering the vote of thanks. Thank you all who joined us physically and virtually and contributed towards making this event a success. As Mr. Sridhar said, we'll be back very soon, hopefully with the pandemic completely behind us, with a much bigger, better and grander version of National Taxation Awards. The lunch is being served in the hall just next to this one. But before I let you go, I request all the winners of the awards, if you could just come closer to the stage for a group photograph. I repeat myself, all the winners are requested to stay back for a group photograph, please.